all of this nasty space and the nasty time that we've been going through. In other words, we paid our dues. We have paid our dues, and now I feel like we are very close in the mining space to being rewarded with some substantially higher prices in gold and all of the shares taking off and going substantially higher.
You're listening to Kerry Lutz's Financial Survival Network, where you get valuable information you just can't find anywhere else. To thrive in today's trying times, you need the Financial Survival Network, now more than ever. Go to financialsurvivalnetwork.com and get your free newsletter and gift. Financial Survival Network, now more than ever.
And welcome. You are listening to the Financial Survival Network. I'm your host, Kerry Lutz. As we conclude October 23 of 23, the sector, mining stocks, junior miners, in the face of higher gold prices, continue to get decimated by the market. And look, if you're new to the sector, it's got to be one of the worst experiences you've ever seen, where fortunes just disappear literally overnight. If you've been through this, through multiple ups and downs, multiple bulls and bears, as my next guest has, then you have a somewhat different perspective. But no matter what your experience, when you see a market like this and you see your capital dissipate almost overnight, it's very difficult. Dudley Baker is with us. Dudley, it's great to have you on. Your site, Common Stock Warrants, well, maybe it's the biggest buy, an even better buy than the underlying warrants here at this point. Hey, if you got a question for Dudley or myself or anything else, kl@kerrylutz.com is the place to send it. And please give me your thoughts. How are you faring in this resource bear market, at least precious metals, certainly? Dudley, it's great to have you back on. So, hey, we're all kind of in the same boat here that sprung multiple leaks. We're all kind of sinking, some faster than others. What can you tell those of you out there who are really feeling kind of down and maybe bordering on despondent?
Well, it's always good to be with you, Kerry. But I understand, for those of us that have been in this sector for a long time, we get it. We don't like it when we've got these long, bear markets and stocks. But we've been around long enough that we know there's another side coming, an upside that will be coming. The question is it coming, soon enough for most people? And a lot of younger people, at least, don't have the patience to wait. And for me, I've a lot of times hang on longer than I should. But if we own basically some quality stocks, mm-hmm. and even throw in some of the smaller speculative plays, but they're smaller speculative plays that are still selling for pennies, that still have assets in the ground, and they've got some good joint venture partners, and so these will too be good. But in your recent interview with Rick Rule, and I think you titled it up, I'm in junior mining stocks for 1,000% gains. Mm-hmm. Okay, well that's the game. That is the game. So and I fully agree with that. And a lot of times I'll say, okay, if any of those individual stocks that go up tenfold to give you 1,000%, if those stocks wants to have also stock warrants that are trading, then you can think you're going to double or triple that 1,000%, and now you end up with 2,000 to 3,000% gainers. Those individual companies do have some long-term warrants. Mm-hmm. So it's, but no, this has been an incredible period of time. Now, what we're seeing right here is that over, say, the last 2.5 weeks, since all the problems over in the Middle East, gold has just taken off like a rocket ship. And we're basically up a good 175 points or something in gold, and the question for most of us is, well, what about the mining stocks? What the hell has happened? Well, you look at the GDX, and yeah, it's gone from maybe 26 up to 30, and then it's back down a little bit, but not the significant gains that you thought should have taken place by this big move in gold. So, and no one here has the holy grail. Will tomorrow the mining stocks start going crazy and playing catch up? And then that could be, but we've a lot of times you just don't know until we're further into this game as to what is going to happen. So you might say that this last big pullback in gold down to basically that 1800 range, and now we're back bumping on the 2000 again until we take out these old highs. So we're sitting here on a chart looking at a triple top of roughly 2075. And so, the people that I listen to, other services, etc., seem to think that the fourth attempt coming up should be easy to take out that triple top that's there. And that we should immediately shoot straight on up to 2400. This is the picture that I've got in my head. Of course, that's really 400 points up in gold is a monster move.
Sure.
Now we've all got different ways that we play this. And I've always kind of been the stock guy, but we know you've got a big audience. Sure. Some people may say, I'm playing the gold futures market, and maybe that's the way that they want to play it. And maybe there's an argument for diversification here. Do different methodologies, etc. But I think you could play the futures market. For me, that's a higher risk than a lot of people like to take on. It's highly leveraged. Obviously, if you're right, there's a lot of money to be made. But if you're wrong, you better be employing some stop losses, or you're really in trouble. So what's always seemed kind of more conservative to me is to buy some of the mining stocks and to have a basket of mining stocks. And, back in the day, I more so did a lot more, and it's probably where you and I met, is one of the mining conferences, probably in New York. Yeah. And, it was so much fun. You literally interact with virtually all of the newsletter writers. You could pick everybody's brain. You'd walk the aisles of all the mining stocks that were there at any of the given shows. Get to meet and mix and mingle with the management of these companies, and it really gave you a certain feel and flavor about what we're doing. And so I haven't done that in a few years. I don't think they're quite what they used to be. We were at a really unique period in time. Yeah, some years back. Bopping around at these different mining shows, and that was really cool. But I think it's all about a basket, for me, a basket of quality mining stocks. You have to decide how much risk that you want to take on. But there's a lot of good companies out there. I want to feel like I own several of these. I've probably got a good 40 some odd different positions myself. Obviously, the top 10 or 15, is where more of my capital is at. And but I'm looking for all of these in a rip-roaring bull market to all go up the 5 to 10 to 15 to 20 times. And this is our, quote, payback for all of this nasty space and the nasty time that we've been going through. In other words, we paid our dues. We have paid our dues, and now I feel like we are very close in the mining space to being rewarded with some substantially higher prices in gold and all of the shares taking off and going substantially higher. And I always say, it's every to say you're looking at shares, well, that's true. I'm a lot of times known as the warrant guy. So it's like, well, Dudley, you haven't said anything about warrants. So, well, yeah, but it all starts with a given company. You don't wake up one morning and say, hey, I'm going to buy some stock warrants today. But it's like you're not going to buy any stock options today.
Maybe if you had a nightmare, you would do it, right?
Oh yeah. No, but it's a warrant on what? An option on what?
Yeah. And
so I know some of the other people that I follow have been this bull market, quote, and gold has been elusive. So it's always better. One of their positions is continuing to buy call options on the GDX. Mm-hmm. Okay, well, that's probably not a bad thing, but yet as we go from 3 months, 6 months, a year, 2 years, you've got to keep buying these options. So you've just lost a lot of money as these babies expire on you. Mm-hmm. And so how much capital does anybody have? You know, they don't really address that.
That's the question, huh?
And even if you're sitting with a decent amount of capital, how much do you deploy into, say, options or even warrants for that matter? You know, you got to keep everything in balance. But at least with the stock warrants, what we're looking for is those that do have preferably a long life of anywhere from 2 to 5 years. And so, and as these markets do start picking up, I think as more of the mining companies will start to want to raise capital at little higher prices, we will end up with more and more stock warrants that will be listed and available for us investors to buy.
Right.
So right now, there's still a good basket of stock warrants in our database. So our database, we've done this for many, many years now, and everything's up to speed, sortable, filterable, just about any way you can do it. And there's, I always say, there's great opportunities, whether it's the mining space or any other space that you're looking for in the U.S. markets, biotechs or anything. Everything is there in our database.
All right. Well, hey, you definitely have a proprietary database. There's nothing else there quite like it. It's kind of a hyper leveraged way to really play this sector. You know, I always subscribe to the theory that every dog has its day. Not that the entire sector is a dog, but certainly in terms of the way it's performed, relative performance, it's a dog. Okay, let's just be honest with each other. It's a dog.
I think even early this morning, maybe we got Newmont just about hit lows, and so
Newmont, and they're making boatloads of money, right?
Well, this is what gets the average investor. You know, it's like you really have to scratch your head. You say, you know, gold is just rather up 200 points, you know, in the last 2 weeks, and Newmont's going in the opposite direction. Well, we know we've got increased revenue coming in. So, what's wrong with this picture? Yeah. This is a psychological game here that's being played. It's almost like the last attempt to shake everybody out of this mining sector before it really has one hell of a big up move. And what I'm looking for is not an up move that's going to last 3 to 6 months.
Not at all.
We're looking for a couple of years, 3 years, 4 years, where these little bitty companies, they've actually got time, you know, to start building. I mean, they're building a base now, but to have time to progress. And then the final blow-off stage, you know, 3 to 4 years from now, would just be incredible. But we've got to have, these little ones will not get off the launch pad here, maybe for the first several months. So, but right now, when we see even the Newmonts of the world and the Barricks of the world can barely get off the launch pad, these little companies don't have much of a prayer. You know, so it really is a dicey, in a scratch your head situation. You really have to have a lot of faith in what you're doing and some of the stocks that you're picking, and yeah, I think those of us that have been around for a while, we've kind of seen this, and are prepared for a little more time if that's necessary, because we know the rewards will be there at the end of the day.
Right.
But for newer people, you know, it's they want to say show me, you know, and they're like maybe they've never seen them.
Yeah.
Massive reality. But no, I always say, you know, just another quote here. When I was listening to your recent interview with as you call him, Martin Armstrong. I forget exactly the context in which y'all were talking, but he's using the term curiosity and desire.
Mm-hmm.
And so, you know, everybody has to have the curiosity and the desire. So it's like new people, I'd say, in the mining space, you do have to do some research. You can look at some long-term charts. You can see the cyclicality that's going on. So you get curious enough. And then the desire is, how do you play this?
Yeah.
How do you, and each individual has to answer that question for themselves. From a safety standpoint, from the futures, from the stocks, from the options to the stock warrants, and with it, you just need time. You gotta, if you're fortunate enough, and many times I've been fortunate enough that when a company comes out with a new stock warrant that's got a 5-year life, I'm thinking, wow, this is the holy grail. Because I know within this 5 years, this warrant is going to have a hell of a move. And more often than not, that is your key to the 500 to 1,000% or better. And normally, the earlier you get in, when that warrant starts to trade, the better off. And so a lot of times I always say is that this is kind of why you need to be a subscriber to the service, because, yeah, we're going to be there at day one. As we see new warrants coming into this space in the junior mining space and be all over the top of this, I am personally looking for these opportunities myself. Number one, I'm going to get them added to the database, so I follow all the filings and everything, and because we've got to get them in there for all of our subscribers, and me, I want to see them as well, because I'm looking at the personal opportunity, you know, to be in as soon as possible, and to increase our chance of some
same here.
Yeah. So I just love that expression that Marty had, as a curiosity and desire. So all investors have to, you know, come at these markets in different directions.
Absolutely.
Yeah. So I think we're on the verge of the precious metal sector coming alive, and if so, we know we will be well rewarded. Give us a note. If this sector, if gold continues to go up here, and we do go up to the 2,300 or so, and if in pretty short order, the Barricks of the world and the Newmonts will be participating.
They'll be printing money, right?
And this is just, it makes no sense. Truly makes no sense.
Agreed.
I think it just that they're probably going down a little bit just with the average stock market, and so I think that's the game that's being played, is they're just being sold off with the general market environment. Mm-hmm. But it's I kind of thought that it would be maybe related to option expiration last Friday, but I don't think that was the case, because they kept going down a little bit early this morning. But no, I do believe that we're very close to a significant turn coming, and again, we just offer something different here at Common Stock Warrants. You know, I started this oh my God, May of 2005, so that's a long time ago, and
long time ago, man. Don't date us here, please.
Lots this baby on 2-1 gold.
Yeah.
Into Moriarty, and
I love it.
Way back at that time frame. So it's been a fun ride. We offer deep service, and I'd love to have everybody. You know, I go back so long If people
Not that old there, man. Come on.
Oh no! Get back to this curious. If people are curious about stock warrants, just go to the website, Common Stock Warrants. If you sign up for our free email list, you will be able to download a couple of publications that we've got. Number one is mine, the Stock Warrant Handbook, which is substantially up to date. But the other one is the Speculative Merits of Common Stock Warrants. This was a book that goes back to really 1949.
Really?
Sidney Freed, who I deem to be the grandfather of stock warrants. He had a publication called the RHM Warrant Survey way back in the 1950s, 60s. And so what I've got his original publication, The Speculative Merits of Common Stock Warrants.
Yeah.
And I've got it in a PDF file, and it's available for everybody for free to download.
Please send that to me. Send it to me, okay?
Yeah, no, we'll do it. But it is so, this is written on an old Royal typewriter. You can just see it's just somebody, he just sitting there banging this stuff out.
Yeah.
And it's like incredible stories, incredible charts. And here's the thing, nothing has changed.
Let me tell you a story about warrants. My mother, she bought shares in Chrysler, preferred shares, and they came with a warrant back in the old days.
Yeah.
And, her thing was, what, is the government going to let Chrysler go bankrupt? And, that was then, this is now. So in the meantime, Chrysler tanked. I think she only had like $10,000 invested in it. Not a lot of money. I mean, it was like $1 preferred. It was cumulative preferred. So it's Chrysler cut out their dividend. All right. And the preferred went down to like next to nothing, like $1.50 from 10. I'm just giving numbers. I don't remember the exact numbers. It might have been a $20 share. And then, they got the bailout, and then Chrysler turned around. And at the time, it was like, well, hey, I'm sitting on a huge profit now. The stock had gone up many times. Plus, she got paid she was going to be paid all of her cumulative dividends, which was as much as the stock. It was like a 5 or 8% cumulative preferred. So what do I do? And we figured out back then, if you sell off because the warrants were publicly traded. So you sell off the preferred before they pay the dividend, then it's a capital gain, because back then dividends were taxed at ordinary income rates, but capital gains were taxed at 15 or 20%. So she sold that off, exercised her warrants. They then went up like 2 or 3 more times, sold off those warrants. It turned into a major windfall. And, obviously publicly traded warrants aren't as popular as they once were, because they tend to put a floor or a ceiling on the price of the stock, except when the stock goes parabolic, then they participate. So, so anyway, that's just one example. But hey, we've got a link to Dudley's site. I strongly urge you to become a subscriber just like me. Dudley, it's always a pleasure. Thanks for coming on.
You bet. No, always good to be with you, Kerry.
Thanks for listening to Kerry Lutz's Financial Survival Network, your solution to today's trying times. For the latest, go to financialsurvivalnetwork.com. Financial Survival Network, now more than ever.